Happy Wednesday. It's your friendly neighborhood loan officer here with your Wednesday market update. I hope you're hanging in there. Spring's in full swing and I'm just trying not to sneeze my way through this update or panic about Friday's PC report. We've got a lot to cover today, from the GDP alphabet soup to home sales and some mortgage news, so let's dive in. First up, let's talk GDP. It's a big buzzword, right? It's how we gauge if the economy's thriving or if the economy's taking a nap. So what's in it? Let me break it down. Picture this: C plus I plus G plus X minus M. Easy as pie, right? Well, maybe not. Let's break it down a little further. Well, that C, that stands for consumer spending. That's the heavyweight champ at about 2/3 of the GDP. I is business investment. G is government spending, both decent chunks. And then X minus X is exports minus imports, which lately drags us down a bit with that trade deficit. Why does this matter? Well, durable goods data just dropped for February, and it's a mixed bag. Headline spending popped up big thanks to defense, but the core number, stuff that feeds the GDP, was down, missing expectations. Shipments, though, were solid, hinting at a GDP boost. The Atlanta Fed's first quarter estimate was negative last we checked, but today's update with trade data might nudge it near flat. Still not a party, and tariff front-running could mean a future dip. Stay tuned. Market vibes, they're a little jittery. Mortgage-backed securities are down a little bit, and the 10-year treasury is at 4.34%, poking above a key level that I'm not really crazy about. It's like a big tug of war. The bears are pushing the yields up, and the bulls are fighting back. Friday's PC inflation reports got everyone on edge, but its estimates are aligning with what I'm saying, so maybe it won't be a total disaster. Now let's talk about housing news. Existing home sales surprised us in February, climbing thanks to more supply pulling buyers off the sidelines. Sales rose nicely overall, especially in the South and the West. Through the Northeast took a dip, and the Midwest it held steady. Economic uncertainty might cap the fun, but it's a win for now. Meanwhile, the USDA just yanked temporary loan eligibility for some non-US citizens effective last week, so that's a curveball for rural buyers. On the flip side, good news from the FHFA's new boss, Bill Pilt. He's not cutting Fannie and Freddie's conforming loan limits. There's no shrinkage that's going to be happening there, so big loans stay in play. Mortgage applications this week, well, rates held at about a 6.71 on average, but overall volume dipped a bit. Purchases edged up, highest in nearly 2 months thanks to FHA action, and refis slipped, though they're still way up from last year. Cash outs are 70% of the refi game, so realtors, if you're not pitching debt consolidation, you're missing 28% of the action. I've got one of the best tools to help you nail that, so let's chat. Heads up, today's Atlanta Fed GDP update could move markets. Tomorrow's Q4 GDP is old news, but it's worth a peek, and Friday's PCE is the big kahuna. That's your rundown. Hit me up with any questions. I'm here for everyone, for my realtor partners and for any borrowers. Catch you next Wednesday and stay awesome.